Happy Wednesday, everybody, and welcome to another day of earnings. Today, machines are going to look at Bank of America, Synchrony Financial, and J.B. Hunt Transport Services.
Bank of America announced results on April 18, 2022. Interesting facts picked up from the call. Across the combination of our consumer and wealth businesses, we saw more than $90 billion of investment loans. Company modestly increased our full-year new tech initiative budget for the year to $3.6 billion. Company is going to build capital over the course of the next couple of years by about 50 basis points. Expenses increased 4% driven by higher revenue-related costs and resulted in over 600 basis points of operating leverage, and we generated nearly 7,000 net new households in Merrill and more than 800 in the private bank this quarter. Looking at linked quarter growth from Q4 and combining consumer and wealth management customer balances, our retail deposits grew $53 billion in just the past 90 days. Over the past 12 months, not only did we see strong investment flows of more than $70 billion, but deposits grew $59 billion, up 18%, and we added $22 billion in loans over the same period, marking the company's 48 consecutive quarters of average loans. Bank of America has $2 trillion deposits and less than $1 trillion in loans. Machines also focused on the more qualitative remarks by management, flagging the following. Given the forward curve expectation for higher interest rates and our expectations are for the long growth, the company expects significant improvement to the next several quarters. The economy is beginning to return now to something more normal after bouncing around a bunch. The company is probably more liquid now than it's ever been. Even with the fuel cost of 40% or more from last year, fuel represents about 6% of overall debit and credit card spending and a lot less of overall spending as cards. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Could you give us a sense of what the deposit repricing assumption is in the plus $6.8 billion in sensitivity for the first $100? And I just wanted to clarify something, Brian, that you sent to Betsy. Did you say that you expect 2023 expenses to be between $59 and $60 billion and then for modest growth to return in 2024? Are you planning to grow securities balances? So Brian and Alistair, what do you think the chance of recession is in 2022? Finally, we drilled down on specific items to see if there was enough relevant information. On spending, consumer spending remains strong, unemployment is low and wages are rising. The data shows continued growth in the average deposit balance across all customer levels, which suggests capacity for strong spending continues. On economic growth, the company predicts the economy to slow from 3% growth in 2022 to a little below 2% in 2024. Their economists do not have a recession predicted in terms of this year. On loans, consumer loans continue to grow late quarter as well. On inflation, the company has upped their forecast for inflation. On expenses, the company expects Q2 expenses to be down modestly from Q1. Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 57% positive. About spending, the sentiment was 63% positive. About growth, the sentiment was 71% positive. About outlook, the sentiment was 66.6% positive.
A short look at how algorithms on Mark's Sign Algo simulate investing in Bank of America identifies algorithm buy Sign 001 as the best algorithm for buy and hold, with a 55.87% return over the last 5 years while being 92% of the time in cash.
J.B. Hunt announced results on April 18, 2022. Interesting facts picked up from the call. For the quarter, the company spot business was up low single digits. Specific to truckload volumes, growth was 15% versus the prior year period. CapEx plans of $1.5 billion for the year remains the target, despite being a bit behind the plan due to continued constraints and equipment availability. During the second quarter, the company did see approximately $14 million in gains on sale of equipment, which is a bit unusual. Machines also focused on the more qualitative remarks by management, flagging the following. Demand for company services, and in particular the asset side of the business, is the strongest in 27 years, and this demand continues to put pressure on the need for more equipment and people going forward. Most of the customers have been primarily concerned with on-shelf availability, not as much around efficiency. Spot prices for highway solutions have risen because in some cases, intermodal capacity was tapped out. The company is cautiously optimistic the velocity will improve, which will create more capacity for the customers while improving efficiencies and costs in operations. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Can you just clarify those comments about the shutdowns in China and what you think that means for volumes now and then heading into the summer? And then, Darren, just with spot prices down, but fuel up a lot, how do you see the spread right now between trucking and intermodal rates? How sustainable is this type of outperformance as you continue to invest in the business? Is there any way to better understand how that limiting capacity is limiting your growth? Do you have customers out there asking for capacity in 23, 24, 25? How much visibility do you have, and where are your strategic customers looking to grow with you? Finally, we drilled down on specific items to see if there was enough relevant information. On labor, it continues to be an area with the greatest inflationary pressure in both professional driver and non-driver salary, wages and benefits, and the company expects that trend to continue throughout the remainder of the year. On supply chain problems, the company forecasts it to get a lot worse into the summer months, particularly with what's happening in the supply chain from an ocean perspective or in China coming inbound. On drivers, the company added 1,889 net drivers during 2021 and has so far increased the driver force by just over 1,400 this year. Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, sentiment was 50% positive. About prices, sentiment was 78% negative. About investments, sentiment was 93% positive. About growth, sentiment was 70% positive.
Synchrony Financial announced results on April 18, 2022. Interesting facts picked up from the call. And in terms of average credit line by credit segment, the portfolio super prime, prime and non-prime lines are still lower by an average of 8% compared to 2 years ago. At the end of the first quarter of 2022, approximately 40% of the balances represented super prime customers, another 35% came from prime, and the remaining 25% came from non-prime. Improvement in loan yield and 33 basis point reduction in interest-bearing liabilities cost each contributed 26 basis points of NIM improvement. As more consumers returned to the road and diversified in value, purchase volume increased 25%, driven by strong retailer performance and higher customer engagement. The 17% increase in health and wellness purchase volume was driven by broad-based strength led by dental. Based on the performance across the portfolio, the company does not expect the portfolio to reach the mean annual loss rate of 5.5% until 2024 unless significant changes in the macroeconomic environment develop. At the platform level, home and auto purchase volume was 10% higher due to continued strength in home and improvement in auto. Machines also focused on the more qualitative remarks by management, flagging the following. The macroeconomic scenarios include a minimum of 5 interest rate increases during 2022, qualitative tightening measures starting in the second quarter, a slowing economy resulting from these actions, and continued higher inflationary conditions. The company became more confident that it would not see a faster credit normalization, which reflected in a slower glide back to the main loss rate out in 2024. The company believes that at least for the balance of the year, the consumer is strong. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. And with the outlook from unemployment to remain pretty strong here, maybe outside of a recession, can you just talk about what you see as the drivers of normalization, and are you seeing any impact from inflation on your customer spending habits? Are you seeing any stress at all in the lower income bands? Is it more kind of acceleration in terms of the customer activity, or is it still a bit of a catch-up from some of the pandemic-related maybe on the healthcare side? Finally, we drilled down on specific items to see if there was enough relevant information. On consumer spending, the benefit of excess savings due to stimulus-modified spending behaviors and widespread forbearance. The company expects consumer demand to remain robust, supporting broad-based purchase volume growth across the various industries and markets it serves as consumer savings begin to decline and payment rate moderates, while on a lag, it would expect purchase volume growth to moderate as the year progresses. Elevated payment rates continue to drive year-over-year improvement in the delinquency metrics. The combination of strong purchase volume and a slight moderation in payment rate drove loan receivables growth of 8%. Dual and co-branded cards accounted for 42% of the purchase volume in the first quarter and increased 29% from the prior year. Other income decreased $23 million, primarily reflecting higher loyalty costs due to purchase volume. Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 80% positive. About costs, the sentiment was 56% negative. About growth, the sentiment was 72% positive. About Outlook, the sentiment was 71% positive. I hope you found today's updates helpful. If you want to learn how to build your own algorithms, you can check our free YouTube channel where we post hands-on courses about how to build them, or get the book that is looking at multiple types of investment algorithms, or feel free to check our small group customized lessons for something more personalized.